This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports in June dropped 11% from a high base a year earlier, and first-half imports fell 2.3% in a rare year-to-date decline. Data showed on Friday, as fuel demand disappoints and as independent refiners reduced production due to weak profit margins. June arrivals into the world's largest crude oil buyer were 46.45 million metric tons, or about 11.3 million barrels a day, BPD, data from the General Administration of Customs showed. That was up slightly from 11.06 million barrels of oil per day in May, but off from an all-time high at 12.67 million barrels of oil per day in June 2023. Higher crude oil prices and weaker than expected domestic consumptions for both gasoline and diesel are weighing on refining margins.
Brent crude oil has been trading in a tight range of $75 to $90 a barrel since late 2022 as OPEC Plus cuts keep a floor under prices while sizable spare capacity, demand uncertainty and sanctions policy prevent the market breaking higher. After a series of gradual production increases that started in early 2021 which unwound historic cuts agreed during the coronavirus pandemic, OPEC Plus announced new production cuts in October 2022 and since then has cut output further. OPEC Plus's need to maintain stable prices, elevated hopes of falling inflation and possible rate cuts every time oil dips below $80 puts a floor under the market, PVM oil analyst Thomas Varga said.
Moving on to the top news in the energy sector.
The European Union may make it easier for governments to slash energy tax rates if prices jump unexpectedly. Under draft proposals, countries are discussing to overhaul the taxes in the bloc. The European Commission proposed a revamp of EU energy tax rules in 2021 to make them more climate-friendly, including by introducing taxes on polluting aviation fuels, which currently escape EU-wide levies. EU countries have struggled for years to agree on the proposal. Belgium, which led negotiations in the first half of this year, eventually halted talks because of the splits between countries over issues including whether to tax shipping and jet fuels.
Oil futures prices settled slightly lower on Friday as investors weighed weaker U.S. consumer sentiment against mounting hopes for a Federal Reserve rate cut in September. Brent crude futures settled 37 cents lower to $85.03 a barrel. U.S. West Texas Intermediate crude futures fell 41 cents, or 0.5%, to close at $82.21 a barrel. For the week, Brent futures fell more than 1.7% after 4 weeks of gains. WTI futures posted 1.1% weekly decline. A monthly survey by the University of Michigan showed U.S. consumer sentiment fell to an 8-month low in July, although inflation expectations improved for the next year and beyond. Next, we have the top news in metal markets. Oil futures prices settled slightly lower on Friday as investors weighed weaker U.S. consumer sentiment against mounting hopes for a Federal Reserve rate cut in September. Brent crude futures settled 37 cents lower to $85.03 a barrel. U.S. West Texas Intermediate crude futures fell 41 cents, or 0.5%, to close at $82.21 a barrel. For the week, Brent futures fell more than 1.7% after 4 weeks of gains. WTI futures posted 1.1% weekly decline. A monthly survey by the University of Michigan showed U.S. consumer sentiment fell to an 8-month low in July, although inflation expectations improved for the next year and beyond.
Copper prices rose on Friday with support from a weaker dollar and hopes that the growth in exchange stockpiles could be coming to an end, though a softer demand outlook in top metals consumer China kept the metal on track for a weekly decline. 3-month copper on the London Metal Exchange was up 0.9% at $9,875 per metric ton by 15:51 GMT. It has declined 0.7% so far this week. September futures on COMEX added 1.9% to $4.59 a pound. The US currency weakened, making dollar-priced metals more attractive for buyers using other currencies. After US producer prices rose moderately in June, strengthening the case for a September interest rate cut.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture raised its estimate for corn production and cut the soybean production forecast on Friday, adjusting its estimates in line with the amount of acres planted with each crop. However, the department cut its estimates for ending stocks of old and new crop corn and soybeans below what analysts had expected. Expectations of large crops from the U.S. have pushed future prices of both commodities near 4-year lows. The USDA forecasts the 2024-25 corn crop to be the third largest in U.S. history and said corn end stocks would still be the largest in 6 years as of September 2025.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from